Hey everyone, this is the Millennial Investor here with an update on my Vanguard and Principal Roth IRA, traditional IRA, and 401K. Taking a look on the Vanguard side, my numbers currently are $11,630, and that's down from about $11,900 that I was at last month. So there's been a decline, even though I've contributed several $100s more to my Vanguard account, and that's just due to the performance of the market. It's kind of experienced a dip in February, and it kind of recovered a bit, and then it dipped again, and we're currently in like a secondary dip right now. So the month of February is probably going to be not the best month for me, but I'll put those numbers together and crunch them up and see what those turn out as. Still, however, at least as of February 27th, I am slightly positive. If I go to year to date, I'm up by $20. That number will definitely change because the 28th of the month was a negative day, so that's going to probably dip a little bit further, but we will see what happens there. In terms of my traditional IRA, my VFIFX is at 36.45, down a percent for the day and down a bit more for the month, and my mainly bonds VWINX is at 26.37. So also a dip, but because that's more bonds, less stocks, less exposure to the market, there was less impact. So no change in terms of shares, and that's my traditional IRA. And in terms of the Roth IRA, it's also invested in VFIFX, and there was also that same decline. Because of taxes and because I'll be owning taxes to the government because I didn't pay enough throughout the year, February's kind of been one of these awkward months where I have money and I'm kind of sitting on it, but that money isn't technically mine because I'm going to have to essentially write a check. So I'm essentially building up some money to pay off my taxes that I owe. So I try to make as many contributions as I can, but because I don't want to pay any penalties or late fees to the government, I need to make sure that I have everything set up. So when I file my taxes officially, all that's being taken care of. Okay, in terms of my principal account and my 401k, I'm currently at $5,836, and that is up from about $5,000 from the last month. So this account has grown 800, and I think the main reason for its growth is it's a smaller account, and I make a bigger impact to the account. So I'm actually trying to contribute and trying to meet that $18,500 limit for this account. So I'm trying to put as much money as possible, and the amount is still small enough that my contributions are larger than the swing of the market. Now, this is probably the first month that I noticed that the market kind of, when it swings, it pushes my net worth a decent amount, 4 or 5%. And I'm guessing as my money continues to grow, those pushes will be more violent. So at least this was some early exposure to that. But yeah, I'm trying to put as much as I can because it's been a negative month. All the contributions to this account are a part-time job that I tend to work on the weekends, and I've essentially been putting in more hours. I just ran a 12-hour shift this last Saturday just because I'm like, well, the market's down, and anything I make from this job, I'm going to be investing into this 401k. So, a side hustle can definitely help increase your goals and, get to where you want to get. Okay, and something that I'm changing this coming month, and I've kind of been debating. I had my contributions originally set to 100% elective deferral. So that just means I don't pay taxes this year. I pay taxes when I eventually withdraw the money. And I had it at 100%, and then I changed it to like 80%, and I was debating whether or not I should move 20% to the market and manage that because my Robinhood portfolio is a little bit down also, and I need to get, or I feel like I need more money in there to try to take advantage of all the downness of the market. But into reading and also due to the lower tax rates this year, I decided to essentially, starting in March, contribute 100%, 100% to a Roth 401K. So that just means I'm going to be paying my taxes this year, and when I withdraw that money, I won't pay taxes on the original investment as well as the earnings on it once I reach retirement age, or, and this was also another reason I was reading into it, was I can, if I eventually leave this job, I can take that money and roll it over into an original Roth IRA, and then after I believe it's 5 years, I can withdraw not only the original amount, but I can also withdraw the earnings interest free. So quote me if I'm wrong or let me know if I'm wrong, but I think that's kind of how it works. So yeah, this kind of future sight here. I rather pay the lower taxes now because they're the lowest they've ever been, and in the future, when taxes go back up or if they go back up, at least I won't be paying them. So whatever, it's a risk. We don't really know what's going to happen in the future, but heck, let's see what happens. Okay, and just if you wanted to see how the spread is for it, I'm currently about 50% in balanced asset allocation, about 22 in small mid US equity, and 28 in international equity. So the darker orange color just means the more aggressive stock, or not aggressive fund, more risky versus a more balanced portfolio. So these are all ones that I checked and I thought would be good for my current goals. So yeah, February not the strongest of months, but I'm hoping March is a much better month. I'm I'm pushing for March to be a really good month. So we'll see how that turns out, and I'll keep you updated. Stay tuned. I have more updates coming throughout the week, and if you have any questions, let me know. This is the Millennial Investor, signing out. Peace.